Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday, and it's February 2nd. This will be our chart lesson for the day, and it was mostly uphill today. This is a spike in a channel. It's really drawn as two separate channels, but really what happened was prices spiked up and then finally fell into this channel. This one's way too steep, and you can see it didn't last very long, and then we went into this flatter, more sustainable channel, and there's actually some channels within that one. I didn't draw this channel early on until we started to get this resistance up through here, and then I drew it, and you can see we kind of had an overshoot, which led to a break. It's not much of a break, but it is a break. Moved to a new high, and then we went sideways after that. So technically you could have played these other moves and probably made it much easier, but I wanted to show you the whole picture. And also notice that you had this first leg up, and if you just measure that and move this up here to where we had the break of the first channel and prices started early, started up again, you can see that would have been our measured move. We didn't quite get there. We missed it by a few ticks. That would have been a great target. That would have kept you in this trade at least till this overshoot. You might have exited here and then look for a new entry. But as long as this channel's in play, if you want to be a little more aggressive with your runners, try to hold on until you get a break and a new high. The only problem with that is sometimes you'll take a hit on that. So generally, I like to exit and re-enter. And people always ask me why I don't talk more about the exits. And it's really your exit orders are more personality driven. And I talk about this occasionally, maybe not enough, but I don't want to go into a lot of details about it. But just understand that my personality doesn't allow me. I don't like to have profits up to here and then watch them all disappear coming all the way back to here, because it could just keep going and take them all back. So when I start to see my profit, let's say I entered down on one of these trades and I'm up here and I start to see that profit erode right here, I'm going to exit and I'll just look for a new entry. That's my personality. I'm good at finding the entries, so that works for me. Some people are not as good at finding the entries, and they like to hold on and get as much as they can out of a trade. Well, if you've already scalped out 90% of your contracts and you're just holding one or two contracts, well, maybe you use your entire trade as your risk capital on that trade and you give it more room. So it's just up to you and how the key is you got to feel comfortable when you're trading, or you're going to make a lot of mental errors. I'm not comfortable watching prices back up and I start making too many mental errors, so I just exit and look for a new entry when one appears. But if you struggle with that and your personality says, hey, I'm good at hanging on, it doesn't bother me to take my profits back because I know occasionally I'm going to get a big, huge runner, then by all means trade it that way. So that's the reason I'm a little more vague about the exits than I am the entries. The entries, there's no room for interpretation. There's no room really for error. You got to enter. If you're even a tick late, in most cases you're too late. You have to follow the rules on the entries. But the exits and on the scalp, you really need to follow the rules. But on the runners, you can kind of tailor that to fit your personality and to fit your trading style. So just keep that in mind. But let's get to the trades here. Again, clearly you can see we spiked up, went into this channel, we ran it all day till we got a break here. And there's a two-legged correction. There's a couple of little swings in the middle, but there's a two-legged correction down, and we moved up. And I'm not sure if we ever got a new high or not. It looks really close. Let me just look at it. We did not get a new high. We just continued to chop sideways until we finally sold off right into the close. We actually bounced a little bit right into the close, but we had a pretty nice correction here. We came back and tested this original kind of support. You can see the support that was kind of right along this level here. And we came back to that and then bounced. So let's back out here a little bit, go through the trades. There's not a lot of them, but there's some good ones here. And this is a good example on a trend day. If you can catch them, get these runners, because there are a few here you could have caught. Really, this was more sideways than anything at this point, but you can clearly see if you drew that trend line off this first swing, it starts to bounce up there. Those first two swings, I should say, it starts to bounce here. And really, I kind of adjusted it off of these highs and moved it down a little bit because originally I had it a little bit steeper here. But 7 o'clock came just as we're kind of making this little swing in here. And notice you got a new swing low. That's the first break of the blue of this two-tiered channel working up. That's the first break, and you try to go lower once, you try to go lower twice, and it fails. And it gives you this nice bullish bar. It's a failed second entry short. There is a little bit of resistance there, but this has been a strong uptrend. I'm going to take that trade on that failed second entry short there. Notice it does come back again. You would have already scalped out. No runners here. It does come back, but it doesn't make, it makes a higher low right off that trend line again. Unfortunately, you don't get a setup there to go long, and I don't think you want to enter in this, unfortunately. So you just kind of miss this next move up, and you can't enter long way up here. Even though it keeps going, don't, if you see that, just ignore it. A lot of people will beat themselves up. I knew I should have entered that trade. Don't do that, because when prices get this far away from, look where your EMA is right here. And that EMA works like a magnet. When prices get away from it, they pull it back to it. And when prices approach it, they repel it. And that's pretty much how the EMA acts. And you need to look at it like that. Now, eventually we'll push through and it'll start acting like a magnet from the underneath, and you might start trending down like way over here. Notice how we push through the EMA. Now it's acting like a magnet from the low end. It pulls prices back to it when they get away. And then when they get to it, it pushes them away. And notice the further and further you get away, the faster and harder it'll snap back when it finally does. So keep that in mind. That's a great, that EMA is a great tool. And if that EMA is pointing up like that and prices are mostly all above it, that's an uptrend. Stay with the trend. So anyway, you just have to kind of watch this one. It does come back here and bounce, but notice how that two-tier channel's in play. You can't go long right there. And this is just sideways. And then finally, you get a setup here. Notice we come back to the yellow trend line. This confirms it. Notice what happens. You got a new low, and you try to go lower once, and then you're going lower twice here. So it's two attempts to go lower. It's just like a failed second entry short. But the big thing, it's off the key entry point. It's only a first entry, but notice you do get a close outside, a move to a new low, and then it turns up. Off that key entry point, off the EMA, nice signal bar. If you didn't have the failed second entry short, I'd probably skip that trade because it'd just be a first entry and there's too big a chance. I'd wait and see if you got a higher low, which you do, but it's way over here. And again, notice you go up and you try to go lower once, twice, and then you make this little 2-bar matching low and it breaks lower. But again, it's at the key entry point, but that's also a first entry, second entry long. So I like that one right there. Another nice signal bar right off the key entry point, and off it goes again. And we just start working sideways again. This is a little trading range. It doesn't have, it's more of a support level because you can see you're still making higher highs each time we go up. So it comes back and tests this low multiple times, but this is the first time you get a decent signal bar at the key entry point. So I like going long there. Hopefully you get a higher low here in case you're not brave enough to take that one, but you don't. It just takes off. That's a quick, easy trade with the, you may not have got a runner here depending on how you entered this one because it does pull back here after you would have scalped out. Runs up and we actually get an overshoot here. And we just kind of work sideways and then turn back down. I think it's way too early to go short though. So no shorts up here. It's too congestive anyway. It is a long way away from the EMA, but you just don't get a really good setup. It comes back, and then we're sideways again. Again, there's no longs or shorts there until finally we drop down here to the main trend line again. I think it's too risky to take that first trade. It is a second entry. It is at the key entry point on the bigger channel. But you don't have a lot of price action there since way early this morning down here at around 8 o'clock. So I think it's a little risky. You could argue for that one to be green. But I like waiting on the higher low, and you just don't get one till way up here. Now that does look like a failure. You did go a little bit lower, so there's a new low there. But that's still close enough to go first entry, second entry. But look how congested it is, and look at this resistance across there. Prices are back inside this range again momentarily before they push a little higher. So you can't go long there. It's too risky. And you see what happens. It just kind of chops along. You wouldn't have got stopped out, but it's not worth taking the risk there. Runs on up. And then finally, you're coming back down. You get a close outside, a couple of moves to a new low, and you get this little trap here. You really have this little sideways stuff, and you get a little failed break lower. It turns on that engulfing bar. I don't think I'd wait till here to go long. It's just, I mean, you could. There's nothing wrong with that. But I like entering and saving a lot of ticks by going long right here. It broke lower first and turns up. It's like an engulfing trap. Go long right there. And that would be a good trade there. And then that just kind of takes us up, and there's no entries here. You start to see that resistance again up here. There is a failed break higher, but again, this thing's been up all day. Don't take a short there. Even though it works, a lot of times you'll get trapped there. We come down and we get our first break of this blue channel. And prices are trying to go higher. Again, you just get stuck in a little range. Even though it's a nice bullish bar, you can't go long into that. It works, but I don't think you want to risk it. And then notice we come up here. Finally, you touch that high again. Look how many times we've had resistance there, and then you make a lower high, and this actually breaks higher. So you may go short right there. Just to play this, just to play this short-term range. We're probably going to come back down to the low side, and you may get just what happens. You get that little failed break lower before it goes higher again. This is going to trap a lot of shorts. And look how far we are away from the EMA. It is a second entry long too. Notice that swing high, first entry, second entry. But it looks like one leg down, so I think you're better off to wait on a higher low, which doesn't come to way over here. There is actually a failed second entry short there, but we closed below the EMA. And so again, I would wait on a higher low, which doesn't come to here, and then it just looks like sideways action, a lot of congestion. So we don't really get a good setup until you come over here. Now you get a double test of this level, back inside the range, and you get a fairly, I mean, it's not a great signal bar, but it's mostly bullish, and it's a double test, and so that's the better place to enter. It's obvious, you know, we tested that 3 times now and couldn't go lower. We're gonna go higher. As long as you got room before these last highs, midline to scalp out, you're probably good on that one. And then we run up, we try to go higher once, twice, so you get a failed second entry long, big bearish bar. I like going short there. Just again, you're playing this range. And it's been going long enough now that, you know, you're okay to take these shorts. It really had been going, I mean, this resistance started it before 11 o'clock, just after 10:30. And here it is all the way at 1 o'clock. I mean, that's pretty strong resistance by that point. I think you're safe to go short. Even right here, it's been several hours. So most all your movement came early, and we spent most of the late morning all afternoon in this tight range here. So you really had no other play other than to play the range. So really on a strong trend day, if that's only lasting 30 minutes or so, I'd probably tell you stay with only buys. But this has been going most of the day, so you don't have much option other than trade that if you want to trade. So yeah, not a bad trading day. The key is to find the channels. You know, some people live and die. They think if they can't find these trend lines exactly that there's no way they can do this, and that's not true. You got to be close. You know, you can't just draw something blindly on here and expect it to work. But if you can get close, generally you can trade these. Just narrow down into the shorter term stuff. And the key, and all these trend channels are slanted support and resistance. Look how prices cleanly go from high to low, back to high, and then of this yellow channel. And a few times we turned down on the midline there. You know it's correct because it's contains prices real neatly, and the support and resistance is steadily turning prices till it doesn't hold anymore. Same thing on the blue, and we're going from high to low, or high to midline, or low to midline, and it holds all the way up here. And look at the midline right in there. It's kind of hard to see it there probably. Let me make it a little bigger. But you know that channel's correct because it's holding prices just like this range. Look how the resistance up here holds prices pretty strongly. Later on you might have moved this a little higher because it looks like the resistance has moved some, but still I still think you get the most touches with closes right across there, so I still like it there. Same thing down here. You're starting to get consistent support across here. Here's some clues that we may go lower here. You notice how we stop bouncing here. Prices are starting to get accepted at this level, so that's a clue we may go lower. Notice every time they come in here, they bounce. Even if they're not only bouncing momentarily, they're bouncing. Here, they try to bounce it first, and then they're just not bouncing anymore. And next thing you know, you break lower. And you still wouldn't want to go short until you got a trap or something that plays out that shows you to go short here. Because just like right here, even though it's only temporary, prices still fail on the breakout. And that's why we don't trade breakouts. We wait for some kind of we got to wait for confirmation before we want to go short here. You don't just go short out of here because you'll get trapped. Because even if it's only going to be temporary, like right here, this is just a temporary failed breakout, they're usually still going to fail because that's the way these ranges tend to work. What it is you got all these people that every time it broke higher up here, they're going long. And so they put their they'll put their sell stops down here, so it may end up pushing through like this, but once those sell stops run out, it starts climbing again. And that's what happened here. Those sell stops get hit, it rockets down, and then a few more when it starts to go lower again, and plus you get people that sell that don't know any better. They think you sell out here and you buy up here. I mean, I can't tell you how many strategies I've read in the past. That's what they teach, and that's the exact wrong opposite thing to do. Common sense says sell down here and buy up here, but there's no common sense in trading. Throw it out the window. That's why so many traders struggle, because they try to use their common sense, and price action does not operate on common sense. It operates on all of the buying combined of all of the buyers and sellers and participants. And so there's no common sense in this price movement. It's just based on how prices tend to react, and you can learn that. We teach you that. That's what I'm trying to teach you now, is to understand how prices react out of these ranges and in trends, and in, if it's an uptrend or a downtrend, or if it's just going sideways. We have some rules that you follow. If you follow those rules, you're going to be on the right side, or at least trading in the correct direction 90% of the time. Nothing will be 100%. There will always be things that happen that don't follow price action rules. But there's basically what I call a law of charts, and these prices are going to follow that law of charts most of the time. Again, nothing's 100%. So otherwise we could probably trade. If it was all 100%, we could just write a program and go play golf every day, or go fishing, or whatever we like to do, travel, and we just let this program get rich for us. But the prices don't do that. And so it's difficult to write a program that can trade for you that's going to be as good as you can be if you learn to read this chart. So, going to get off my soapbox. I'm going to wrap this day up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.